Hello everybody. So welcome to the Simple Trading Strategy webinar. So this is been recorded, so if you do find it on YouTube, you'll know that it was live once upon a time. And basically what we're going to talk about here is a very simple trading strategy for the part-time trader. So in other words, a person that is either working full-time or doesn't really have much patience or time to sit and stare at charts all day. Okay, so we're going to keep it pretty simple, and I am going to make a few assumptions about what you should know and areas that you need to go and study. And I think the first one that we need to focus on is candles. Okay, so candles are pretty important, and it's important to understand them. I'm going to give you a quick overview of how I read them and why I read them that way. But I do encourage you to go look for candle patterns and pick sort of 3 or 4, no more than 5 candle patterns that are high probability, and you'll know that I've got a couple of videos on that on my channel. So you can just go have a look, search for candle patterns on my channel, and you should find those videos. So without further ado, let's start looking at candles. Okay. Essentially, your candles are either red or green, okay? And they all have tails to the top or tails to the top. Tails to the top, tails to the bottom. Also referred to as candle wicks or wicks. So this line up the top here is a wick and the down is a wick. So whichever one you feel comfortable with, pretty much it is a tail or a wick. Now, what I'm going to do here is focus on this red candle here. Okay, so what happened was the candle opened, and I am on a 4-hour time frame now, and this is the same for every time frame. So the price opened at this level, and it ran down, and it closed at this level. Okay, a green candle, we look at this one here, exact same thing, just in the opposite direction. So in other words, price opened at the bottom, and it ran to the upside and closed there. Okay, so a candle basically gives you the opening and closing value of that time frame. The second thing the candle gives you is the tail or the wick. Now, normally what happens is you can see price opened here. It then ran up a little bit before running down and went all the way down to the bottom here before buyers stepped in and they started buying, driving it up to close it up here. And that is what the tail is telling you. Okay, similar scenario here. You can see price in this 4-hour period, price went all the way down to this level, and it went all the way up to that level. But essentially, it opened there and it closed there. So even though it did go above and beyond the close, sort of to the upside, and below the open to the downside, it still basically is a green candle, although there was a lot of volatility. Okay, so that's pretty much what the tails are telling you. Now, it is pretty important to understand what these candles are telling you. So I strongly advise you not only listen to what I'm saying, but go and do your own homework around what candles are. The more time you spend on candles and identifying candle patterns, the more value it's going to add to you. Okay, this video is not going to cover things like wedges and head and shoulders and pin bars and inside bars and outside bars. Now, that kind of stuff you're going to need to just spend a bit of time on and study them hard, because the more you know them, the better you will understand them. Okay, so the next thing that we want to try and do is to talk about the setup. Okay, and give me one sec. Yeah, let's get to the right slide. So we're looking for the setup. Now, the setup is going to be a couple of oscillators and a couple of moving averages. Very simple and very easy to understand. Okay, so first thing we're going to do is we're going to insert a few indicators, and the indicators we're going to do are the moving averages. So the first moving average I'm going to put in is a 200 exponential moving average. Okay, you've got a simple exponential smooth linear weighted on most of your platforms, but we're looking for a 200 exponential moving average, and we're going to make this a purple. Now, the importance of this, I'm going to switch to daily level to highlight this. So your large institutions often trade off the 200 moving average. They use that as a yardstick to understand whether we're in an uptrend or a downtrend. So if you look at this instrument, which is the Dow Jones, Wall Street, you can see how we are buying off this 200 moving average. Okay, so often what traders do is when we hit the 200, they'll buy automatically. If we're below the 200, they sell, and sometimes they get trapped. Okay, so it is often used as a fairly serious indicator as to whether we're in an up or down trend. And if I switch to the hour, you'll see what I mean. So you can see how we broke below the 200 moving average here, and then we sold off because now the perception is the trend is down, and there are a lot of people that are trading the downside. You can see we trade the upside, we sold, we're still trying to sell off here, and again they sold off the 200. Then we eventually break through, we try come back to test that 200, and we continue moving to the upside. Okay, and you can see here how we use it to support again, broke through, retest the break, and fallen down. Okay, so I just want to go to the end here, and you'll see exactly what I mean here. So here you can see a breakthrough, a retest of the break, and then up we go. Okay, so just bear that in mind, and you'll notice that I've said it a couple of times. We break through, we retest, and then we accelerate. Okay, so that is the first part of the setup. The second part of the setup is some more moving averages. So, and let's get here. But this is where we start getting a little bit clever. So we firstly want a 26 moving average. It's not exponential. I'd like it to be linear weighted, and I'd like to apply it to the weighted close of the candle. Okay, and this is going to be a red line. And in. Okay, now the reason why I'm choosing a 26 moving average is I'm simplifying a strategy called the Ichimoku, which is a very well traded strategy by a lot of people. It is fairly complex to understand in detail, so I'm taking out the two elements which are pretty important, which is Kijinsen and Tikinsen. If you want to know more about the Ichimoku, I do have videos on it as well, but we're not going to discuss that right now. We're really just going to talk about the moving averages. Okay, the second moving average that we're going to put in place here is going to be another linear weighted moving average, but it's going to be a 9-period moving average, and I'm going to make that a blue line. Okay, so what you will notice is you'll see when price is above both these moving averages, we are heading up. And you can see how price bounces off the 20 often. When we are below the moving averages, we are heading down. Okay, the second part of this is you'll notice we get a crossover over here. You can see red is above green, and now we've got blue. Red is above blue, and now we've got blue above red. There's a crossover, which has indicated a change in trend. Okay, the other part of the moving averages is the distance between the two. So if you look at this uptrend, you can see how the moving averages stay pretty close to each other, and then towards the top of the trend, they move far apart. It's always a warning that there is a change in direction coming. And it doesn't matter which time frame you look at. This is a 4-hour. You can see close by and gradually move far and far apart until eventually price moves very far away from the 9 moving average. And that is a warning to say, well, hang on a second, there is potential for a pullback. We've also got a 200 moving average in play, and look what happens. We pull back, we bounce off the 26 moving average, and we continue moving the upside. Okay, so on the 4 hour here, you can see from the 29th of October, pretty much, there was entries over here, and we'll get to the entries later on, but there was really no reason to get out of this. This may have, this fall off or sell off the one day may have worried you, but for all intents and purposes, you should have been able to get this whole swing trade from the bottom here, at least to the 200 moving average, and possibly even a second entry here for the second leg up. Okay, so that is the third part of the strategy. Now there are two other parts to it, and this is now going to be oscillators. The first oscillator that we're going to put in is a stochastic. Now again, I'm going to use a 26 period stochastic. Notice how that lines up with our 26 moving average. We're also going to make it linear weighted, and we're going to have a slowing of 5, and we're going to have a percentage D period of 5. If you don't have the option for linear weighted on your platform, you can use a simple or exponential, or even a smooth if you wanted to. Okay, but for me, I'm just going to stick to linear weighted. Right, and that is our first oscillator. The next oscillator we want to insert is going to be a Williams percentage R range. Okay, now for this, I am using a 9 period. Notice that the 9 corresponds with the 9 moving average. Okay, and we put that in place. Right, so this is pretty much my setup. Okay, so this is how I want my chart to look like. Now we will get into how we're going to use it, but I think it is at this stage pretty clear. You'll see when the oscillators are grouped to the downside, there is a potential turn coming, and when they're grouped to the upside, there is a potential turn coming. Okay, so that is kind of the setup that we are looking for. Okay, so now what I want to do is, let's just pull up our slide. Okay, so we've chatted about candles, we've chatted about the setup, and we are now going to talk about levels. Okay, or as I refer to them, the inside tail. Okay, now levels are pretty much support and resistance. So you can do your own homework on support and resistance. I'm going to give you the way I look at it, and the only way that I trade support and resistance anyway. And I don't get too stuck into the detail of long-term support and resistance. I try and trade with the now. So we're going to just zoom in a little bit here to make it a bit clearer. Now, the inside tail is the critical part of this. Okay, so if I look at these tails here, so where the mouse is now, and I look at these tails here, those are all inside tails. So normally what you want to do is you always look to the left of where price currently is. So you can see price is here now. So I look to the left for my inside tails. Okay, so price was moving up here. So these tails here are not really, they are now inside tails, but they weren't inside tails in the beginning. My inside tails are here. And what I mean by that is price has broken below them. So let's just put some lines in here. So there's my first inside tail, and you can see it corresponds with that one. I then have a second inside tail, which is this one here, and I then have a third inside tail, which is this one here. Okay, and if I look further to the left, you'll see it corresponds with another inside tail. Okay, so in other words, what I'm saying is this is an inside tail because price has gone past it. So there it is there. Now these green bars go past it. It is now an inside tail. It is a level. There is a reason why on this day the sellers were there and they sold it down and now pushed it above. Okay, so every time you see these tails, there's a reason why the buyers or sellers are stepping in at that level. In this area, you can see it's quite clear. It is the 200 moving average. Okay, but if I put another line in here and I look to the left, okay, I will see that's not really an inside tail because price hasn't broken below it, but this area here is definitely inside. Here is an inside tail. There is an inside tail. There is an inside tail. Okay, so that is a level, and you can see that's exactly what price did. There were two levels here, 200 moving average plus an inside tail, and we bounced off it. Okay, now if we look at where price is currently, look where it turned here. It turned back off this inside tail. Okay, so again, it's pretty much support and resistance. So if we just tidy this up and just keep the one line in place here, you'll see there it is there. So this is my inside tail. Sorry, that's my inside tail there. Price rallied up to it, and we had 3 days where we tried to get higher, we couldn't get higher, and we bounced off. So here it was support, it broke through, and here it is resistance. And the important thing about levels is price always comes back to test the level. So there is the level, it came back to test it. It doesn't have to happen in the same day or the next day or a week, a month. Sometimes it can take a year before it comes back to test that level, but it always comes back to test the level. I suppose we should rather say it's very rare that it doesn't come back, because there are some levels that haven't been tested, but there is potential for them to be tested sometime in the future. Okay, and you can see the same applies to your 200 moving average. Price came back to it, bounced off it, and there is going to be a second attempt. There is my second attempt. Okay, we managed to get further past the level. See there, we just got past it. Here we got a little bit further, and then the next day we pushed through. We came back, we tested the level, and we've broken through. Now, most logical thing here is we have not come back to test the 200, and that is a potential. Okay, so the next thing to focus on right now. So what you need to do is you need to spend some time, and now I'm just going to zoom out quite a bit, and to realize that every peak and trough is a potential level. Now, you may be asking me, what are these little triangles that we have here? These are fractals. Okay, and a simple explanation of a fractal is, let me find a set up there. So there is a fractal. So it has two previous candles, which are two lower highs and two lower highs on either side of it. So lower high, lower high, lower high, lower high. Okay, fractal on the bottom here is two higher highs, higher highs, higher highs, and there's another higher high here. So fractals is a complete separate discussion on its own, but what you do is you can put that indicator in. So for me, so it's normally under the Bill Williams, and it is the Bill Williams fractals. Okay, so I use fractals to identify my swing highs and swing lows, and also it is also a pretty good indication of where the levels are. Okay, see there is a level. So this is now an inside tail, and you can see how price came back to it and bounced off that inside tail, which is also a fractal. Okay, so that is pretty much the setup and also the levels. Now, levels are so important. Okay, and we're going to start looking at entries and how we get in and out of these trades. So let's just do a quick summary. Now, we've looked at the candles, we've set up the charts, we've looked at levels or the inside tail. The next thing we're going to talk about is time frames, and after time frames we are going to talk about the entry, which is level, signal, and trigger. Okay, and the last part of this will be around risk. And risk is you never risk more than 2% of your capital per trade, and stop losses are always in place. Okay, so that's enough of the PowerPoint. Let's get on to the time frame. So I am using 3 time frames here. I'm using a daily, a 4-hour, and a 1-hour. I'm not using anything more than that. I actually have no interest in anything less than an hour because, to be honest with you, you don't have time. So if you're a part-time trader, you're not sitting in front of the charts. What you're going to be doing is putting alerts on your charts so that you get alerted on your phone when something is happening. And then you can have a quick look and pretty much get in on the trade. Now, what you need to do is subscribe to this channel, and you'll get 3 videos every single morning, free of charge, open source if you want to look at it that way. And I basically give you my plan for the day on 3 instruments. And the 3 instruments are the South African Top 40, because I am South African based. But then we look at the Wall Street, the Dow Jones, and we look at the German market, the DAX. Okay, those are the 3 that we look at every morning. So do yourself a favor and subscribe, and you'll just make sure your notifications are on, and then you will get notified as soon as those videos come out every single morning. Okay, so let's just reiterate. Daily, 4-hour, 1-hour. Those are the time frames that we are looking for. Okay, I'm just going to delete the noise here. And now let's just focus on our entries and exits. So I'm going to use the last couple of days here. It's been quite volatile, but we're going to start sort of at the top here. Okay, so pretty much what happened is we had a previous all-time high up here. Okay, and an all-time high is something which is a pretty strong magnet. And it'll also a level. Okay, so in other words, what I'm saying to you that there is no tail. There's a top tail there, but there's no inside tail, but it is an all-time high. So what has happened here is we've got a test of the tail, we bounced off, and we've got another test. Remember, I'm on the daily at the moment. The trend has been up. Let's just cut all that off. You can see we are above the moving averages, and this is an uptrend, so we should only be buying when we see this. We're only looking for reasons to buy. The warning bells start ringing when the stochastic is grouped to the upside like this, but it can stay like this for an extended period of time. Okay, and then the other warning bell that you get is when your Williams percentage R is above the -20. Okay, that is giving an indication that there is a bit of a sell-off coming. And you can see all the way on the uptrend, you can see how it groups to the upside, and we have a sell-off. The other thing to bear in mind is that everything happens in twos. Okay, almost like Noah's Ark here, because there's always a second attempt at a new high. So there was our first attempt. You see it corresponds with the oscillator here, there, and then you have the second attempt, oscillator's over there, and we get another high, and then we move off, oscillator moves to the downside, and then it's a case of third time lucky, and we get a new high. Okay, so just always remember that there's always a second attempt. Here you see there was a first attempt to make a new high, then there was a second attempt to make a new high, which did make a new high, and then fell off. Okay, but that is a level. So you can always assume that something is going to happen at the level, and it did happen. And there is a signal bar here. We're not going to talk about signal bars, but that is a pin bar, and this is an indecision bar. So it's a double signal giving you a potential move to the downside. Now, what we're going to focus on here is going down to a lower time frame. And here we are on the 4-hour. and we're going to focus on levels. So this here is our inside tail. Price has gone past it. Okay, but now look at my oscillators here. They are grouped above the 80 and above the negative 20 on the Williams percentage R. So there is my first attempt. There is my second attempt. We've got a grouping. So what do I have here? I've got signals. Okay, so I don't really have a level because I've broken through this level. But often what happens is we come back to test the level. So you can see we've come back to test the level here. We've broken through the level, and now we've tried to get back above it. That is a failure. Okay, so in other words, here is my short entry. Now if I drill down to the hour, you'll see it a lot more clearer. So we broke through the level. I'm waiting for a retest of the level. So in other words, if price had come back this level, and look at all these oscillators grouped to the downside, and then stayed above the level, there would have been an opportunity to get back in long. But it broke below the level, broke, came back, tried to get through the level here, failed. So that is a short entry. Where do you go short? I like to go short on a break of the inside tail or the fractional. So here price broke below it, I'm short, my stop is up here. Okay, so my entry is there, my stop is up there. So I have 114 point stop loss. Now, if you have 1,000 Rand or $1,000 in your trading account, that basically means you do not want to risk more than $20 or 20 Rand on that trade. So that 115 points, 105 points, basically means that whatever size contract you're trading, the total risk there cannot be more than 20. Okay, so for a 105 point trade, you're looking at about probably a 10 or 20 cent contract. Okay, so always only risk 2% of your capital. Okay, so this is also pretty similar to sort of a breakout strategy. So if you research some breakout strategies, you'll see what I mean. But all I'm doing is I'm focusing on the inside tail. Okay, the minute price goes beyond this tail, it's an inside tail. And you can see I could have taken it on the first breakout, or I could have waited for price to come back to test the level and then got a trade in over here. But again, you can see 1, 2 attempts to come back through the level. So the stop loss area is still the same. My entry is here on this inside tail. My stop is still up there. Because you see what happens here. We've got a 200 moving average which bounced off and is trying to get through. There's so many levels that it's trying to break through. Okay, so let's get down to another scenario here. So I'm using the 1 hour, right? And each of these dotted lines, it represents a day. So you can see we have broken through the 200 moving average. Remember what I've said? You are expecting it to come back and test the level. Look at these two areas here. It tried to come back, but it didn't quite get there. Look at my oscillators, group to the top. So there is my warning that we are going to be selling off. Okay, we sell off through the day, comes back up. Okay, my oscillators are still sort of hovering around. They've grouped to the top side. This Williams percentage R has told me that it's probably coming back. And why would it come back? Because it hasn't tested the level. The level we're talking about is the 200 moving average here, but also here is my inside tail. We didn't quite get there. Look further to the left, because there is another inside tail. There it is there. And look where price got to. Came back to that inside tail. Okay? This is not an inside tail here. This is a top. This is the inside tail because price has come past it. Okay, Hope I'm making sense. So the level that we have here is my inside tail. It is also a top, and it is also a 200 moving average. So at this point here, I can take my shorts and be fairly confident that anywhere in this area here, okay, the stop is quite high, it's 182 points, but I can take my trade and make sure that my stop is above these levels here. Because obviously if price breaks above those levels, that trade is off. And this is my short trade. Now the challenge with this, you could have made an entry right here. So in other words, let's just zoom in here. You'll see what I mean. So basically what you could have said is, I'm taking a trade off this level here. Let's move it down. There it is there on the 200 moving average. And if price gets to there, I'm short. And where is my stop going to be? My stop is going to have to be above the previous high. So it's a small trade because that's 190 point stop loss. It's a small position size and we trade. The other way of doing this is we have bounced off this level and we are waiting to turn these tails here into inside tails. And it happens with this bar here. So you could also have an entry just below the tails here with a stop above there. Okay, again, it's a 200 point stop loss. But look at how rapidly we fall off. Right, now the other part of this is to watch these moving averages. When the moving averages are flat like this, we are in a range. It's not normally something you want to trade. You want to see the moving averages pointing down if you're short or up if you're long. Okay, you're looking for your signals. Here is a signal. Here is a signal. And we have a level. There is a level. Okay, so you want to be short up there and you're expecting it to be bouncing around for as long as we're running next to inside the moving averages like this. Eventually the moving averages fall over and you are short. Okay, if it had gone the other way, which is possible, but if you just go to the higher time frame and we look at it, you'll see on the higher time frame the moving averages had crossed over and we were still pretty much in a downtrend. Okay, see on the 4 hour we are in a downtrend, so as long as red is above blue, we're in a downtrend. Okay, so that is the way that we trade that. Right, so I'm going to come right back to the levels here because there's some pretty interesting things happening here. So, well, let's go to the hour rather, sorry. And let's just delete all our noise. Okie dokie. Sorry, we just need to zoom in a bit here. Come back to this area here. Right. So the point about candles, we're going to look at this section here. So we've got these massive red candle here, so lots of sellers. Then we have big move down, but then the buyers step in and create this long wick. So this is a pin bar. Pin bars are very, very strong signals. In other words, this is telling us that the buyer stepped in. Now, what I want to know is whether the buyer stepped in off a level. So what I do is I put a line in there. Then I have a look at my oscillators to see, okay, we are in an area that I'm interested in, although my stochastic's not quite in an area I'm interested in. But I want to see a crossover. In other words, the stochastic moves exactly the same way as what my moving averages do. So I've had a crossover, they're pointing down, the trend is down, but I'm looking for the level. Okay, levels are the critical part of this picture. I'm just going to the left now because I'm now looking to see what is happening here. Right, so here we go. This is not an inside tail, okay? That is an inside tail. And that is an inside tail, and those are inside tails. Now this is on the 4 hour. If I look at this on the daily, you will see a fairly similar setup. Okay, a lot of congestion in this area. And we've also got a 200 moving average that we bounced off. Okay, let's go back to the hour here. And get back to where this pin bar is. Right, so we can now say that we definitely had a bounce off a level. Okay, so we have a warning here. Looking at the candle, we hit the level and the buyers came in. And now we're going sideways a little bit. We break above the moving average. We come back to test this moving average. Okay, and then this bar here, we've got buyers that are buying off the moving average and the moving average is starting to point up. There is my signal to be long. So pretty much want to be long above this bar here. And I want, let me just use one of these here so we don't get too congested. I want my stop loss below here. Okay, so in other words, I want an entry there and I want a stop loss of 237 points. Okay, I am now long. If I switch across to the 4 hour, this is the area that we're getting in long. You'll see we would have got in long on this, in this area here. Okay, and we now have a moving average crossover and we are running. When do I take profit? Well, as soon as I start seeing this, so I see this happen. So I've got the Williams percentage R, which is above the negative 20. That is my warning. It doesn't mean I need to get out. I need to start looking for my levels. And remember, my levels are my inside tails. There's an inside tail. Okay, look what happened here. The buyers sold off there. So I could have basically taken profit there. Okay, or just run my stop loss, keep running my stop loss up below the previous 4 hour candle. So in other words, we break up here, my stop loss would first be down this level. I then move it up below this tail here. I then move it below this area here. And you want to just give yourself a little bit of extra room, okay? And you keep moving it up behind a candle. Okay, and you would have seen if you'd moved it too close to this red bar here, you would have been stopped out. So you want to try to keep it like 2 bars behind. And the thing is here, you can see there is an inside bar here. So there is potential that we're coming back to test this breakout. Okay, and that is what this oscillator here is telling you. The stochastic is telling you as well, it's getting close. But it doesn't tell you exactly when it's going to happen. So there is my inside tail, my level. There is my second inside tail there. Okay, so you can see we broke through this tail and we broke through this tail and we hovered on it. Ran away, came back, tested this tail. We didn't quite get to test this tail, but we did test this tail here and then rallied again. And again, I say this often. That was my first move. One pullback. I'm looking for a second move. Okay, there is a higher probability that you're going to get a second move to the upside rather than a V reversal. In other words, that it just falls to the floor. So that is the other thing that you need to bear in mind. So you'll often get first attempt, pullback. Now you're expecting a second attempt, but now what happens is you move your stop up and you start expecting a potential double top. In other words, getting there, you can see they tried to form it here, and then it falls off, but they managed to break through it. So this area here is now my next level. And look what else is in the area, the 200 moving average. Okay, now the stochastics is saying we're a bit tired, but the Williams percentage R is saying, nope, we're having another attempt. So we're having another attempt to get above that level. So what is that telling you? So if you were long here, you had another long entry here, okay? And at this stage, you would have either taken profit because you've had two moves, and maybe you've got one or two contracts still left in, but you are running a stop loss below this 200 moving average because you are expecting price to come back and test this break. Okay, now I'm going to just show you some really no-brainer trades, and this is off the daily. So we're going to look at this area here. So firstly, you can see the moving averages. Now, the thing about these moving averages is they move apart. So when they are moving apart like this, there is a warning bell that this move is coming to an end. The further apart they move, the worse it is. They always like to stay as close together as possible. Okay, so when they get far apart, something's going to happen. Look at the stochastic here, grouped to the bottom on the daily. Look at the Williams percentage R, grouped to the downside here as well. Okay, so you have 1, 2, 3 signals. Okay, you're looking for a trigger. What is a trigger? It'll be a candle. It'll be a break of a level. Okay, so this is telling you that there is potentially a big move coming to the upside. Your stop level is pretty much, you can say, below this bar here. So when you start seeing all this stuff here, and I look to the left, there is an inside tail. See this bar here? That's an inside tail on the daily. And this candle here came down. It bounced off the 200, so that is a level, but I don't have my signal bars, my oscillators grouped to the downside. So that's not an entry. I want a second attempt. There's my second attempt, okay? But look to the left, there is a breakout here that needs to be tested. So there's an inside tail that must be tested. There it is there. Now I'm looking for a second attempt at this level here. I get it. It happens there. Okay, I even get a third attempt in this case. But this second attempt here, my oscillators are grouped to the downside, and you can see the Williams percentage R is already starting to create new higher highs here. So it's starting to climb above the 20. There is my signal. I'm long. I'm on the daily. I'm long. My stop is here. And now it's not a case of watching this every hour or every 4 hours, because I can anticipate that this is going to turn. Okay, my stop is in place. It doesn't really matter. And look at the journey to the upside. Okay, the stochastic gets to the top here, which is warning you that there is potential for something to happen, but you want to be paying attention to the levels. Okay, and remember what I said, look for the inside level. Here is the inside level there. There is an inside level. So it's inside tail, that's my level. You can see price came to it, bounced off it, came back to test it. So that was the first test of it. Here's my second test. Broke through, try to break back down through that level, and then managed to get away from it. But then we came back to it and down, and you can see here again above it again. Okay, so if I look at where we are currently, that is my inside tail, and I've had a daily test of it. But look at the moving averages, they're far apart. Look at my Williams percentage R, it's indicating a pullback. My stochastic is indicating a strong uptrend. My 4 hour is indicating a strong uptrend, although we are coming together on the moving averages. But my Williams percentage R is saying we should hit another attempt to the upside. Stochastics are saying we're getting tired. Okay, and now the other thing to bear in mind is this is my daily level, but on my 4 hour, there is my next. So there's my daily swing high. There is my 4 hour inside tail. Okay, so your entries are pretty easy. You're looking for a level, preferably a level off the daily. Now if I look at this area again, why did this tail come down to here? Look to the left and you will see there is an inside tail here. quite a few inside tails actually. Okay, and it's not always exact. So there's the inside tail. It does sometimes shoot past it, but that was my level. Look at my oscillators, grouped to the downside. The other thing I want to look for is diversions. So in other words, I've got a lower low, higher high on the oscillator when price has got a low and a lower low. So there is my signal. So I've got a level, my signal, okay, and my trigger would have been this green bar, which is engulfing here. Okay, so in other words, you can see the buyers stepped in here and then they continued the next day. There's my signal. I'm looking for a long. Looking at that same picture on a 1 hour time frame, I would have got in a lot earlier. There's my signal bar there. So I don't have a signal on the stochastics. I do have on the Williams. I've got a level. I'm waiting for a crossover of my stochastics. It's here. So I'm looking for an entry, and my entry comes here on the break of the moving averages above. And you can see moving averages start moving to the upside, and in we get for the trade. Okay, so that's pretty much the simplicity of it. The important part of this is your levels. Okay, and the level is the inside tail. Always look for the inside tail and try and pick it up off the 4 hour. You'll see, I just want to pick up a retracement here. So you can see there's my inside tail. My second inside tail is there. I've broken through the level, waiting for a pullback. There's my pullback onto a level. Okay, moving averages are still showing the trend is up. So which direction do I trade? Up. What am I using to get in on the trade? Look at the Williams percentage R. If it's grouped to the downside and we've bounced off a level like this and moving averages are pointing up, that is a good trade to the upside. Okay, let's just move quickly to the left. I want to give you an indication of a trade to the downside. So here is the warning. You can see the moving averages far apart. Now they're coming closer together and they now cross over. Okay, so here is my signal is here. My stochastics signals here. We're at a level, and now what I'm looking for. So this is my inside tail. You can see we broke past it. So that's my level that I need to pay attention to. And you can see how we keep trying to push back. I mean, this was over a couple of days, and then we fell off. Now I'm waiting for the pullback. I don't necessarily have to take the trade at this level. I still need to be patient and wait. I've had all the signals. It's given me the signals, the level, but I know there's going to be a retest of that level, and here it is. So I could actually wait with a short entry right up here because the moving averages are pointing down. Red is above blue. Doesn't matter if price comes above here because it will need to come back and test the break of the moving averages. Okay, so in other words, it rallies up, hits there. That's my entry short. I can put a trade level in there, short, and have a 80-point stop loss. And then look at the journey to the downside. For as long as the moving averages are apart like this, I just keep moving my stop down on the 4 hour. That's my entry. Okay, let's get another level. I wait for the first pullback. There it is there, or a fractional level as such. And once it's formed, it'll be formed with this bar. My stop goes above there. And price will keep moving up and down. And I just keep moving my stop to every swing high. Okay? Another way that you're looking at this is every time it does this, you're looking for a reason to get short again. You're always looking for a reason to get short for as long as the moving averages are pointing down and in this format. Okay. The minute the moving averages start doing this, you know that this ride has come to an end and you need to get out of the trade. And you can see on the 4 hour, it's pretty simple. You've got quite a lot of time. I mean, these lines represent a week on the 4 hour. Okay, so for 2 weeks here, we're basically going sideways. And then we switched direction and we went to the upside. Okay, so that's pretty much the simplicity of this strategy. And you can see The idea, I think, what you need to do is go back in time and back test how this works. And you'll notice whenever your oscillators are grouped to the downside and you have a crossover of your moving averages, you have trend changes and vice versa on the top side. And the other thing to bear in mind is when you are in a very strong uptrend, and the Dow Jones is a very strong uptrend, that you tend to, your shorts aren't very, how do I put it? Your shorts are scalps. They're not long-term trades. They can go for a week or 2 weeks, sometimes a month. I mean, the whole of October was a downtrend, but they don't go on indefinitely. Whereas an uptrend, when you're in a bull trend, it can go on indefinitely. Okay, so that is my very simple strategy. I know it's quite a lengthy video, but the trick is watch these moving averages. This is the most common traded strategy on the planet, is a moving average crossover. Different versions of it. So some people do a 10, 20 moving average. Some do a 50, 100. Some do a 50, 200 or 100, 200 moving average. Some people even do a 5, 10 or a 3, 9. So it's pretty much open to your own interpretation. But for me, it works very well, especially on the US market. So any market with this high volumes, okay, that's pretty much where it works exceptionally well. And even when it's volatile, like it has been this year, you can see the levels are adhered to pretty much all the time. I mean, there's an inside tail. Look where we bounced off. If I put these inside tails in there, we didn't get there. We broke through. I'm expecting a retest. Retest failed. And we continue down. Okay, so your level is the most critical part of this. And bear in mind, there's always 2 attempts to get through a level, and there's always 2 attempts to test the level. Sometimes more, but as a minimum, there's always 2 attempts. And that's why the double bottom is a very important pattern that you need to research. So double bottoms and double tops, or Bollinger W's or Bollinger M's. And that's a complete different discussion to look at. Okay, your oscillators give you a very good understanding of what's going on, whether the buyers are tired or whether the sellers are tired. Okay, and it tells you that people are getting out because it is taking volume into account as well. So you can see there's my grouping, there's my grouping, and especially on the daily. Now at this level here, I am looking for a short entry, and I start pulling my levels in. There's my inside tail that we've broken through, we've tested. I'm expecting it to go and test here. It tests, and then the test fails. It falls off. Okay, so ladies and gentlemen, I hope that helps you. I hope it makes a bit of sense. And as I say, please subscribe. You'll see every morning I will use the same setup to explain what is going on and what my setups are for the day. Anyway, enjoy your day or evening whenever you're watching this, and be sure to catch up with me on the daily video. Thanks very much. Cheers for now.